Hello and welcome to Business Incorporated live on channels, televisions, and other trading day. Here are the stories you should be looking at right now. South Africa's headline inflation jumps to 3.6% in October, even as core inflation eases, a mixed signal that could pave the way for a possible rate cut. And Kenya's telecom regulator clears the air on new SIM card registration rules. No DNA, blood, or fingerprint collection required. And global energy markets are at a crossroads with oil and gas surpluses reshaping supply dynamics. Who will emerge stronger? We'll discuss that today. And it's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets that we track now. And yeah, we see for the oil market, $64.40 a barrel, 0.76% down. We're still seeing that weakness. It started off in the morning. But WTI yesterday, that was trading sub 60, but that's back $60.33, down 0.68%. Quick check on the metals market now. See gold edge higher today as investors they've sought safe haven assets with attention turning now to what's playing out. That's with the minutes from the Fed Reserve there. When investors are checking out those minutes there. If you could put up the metals market, but we're still in gold edge higher. Silver, that's also up there. They're turning their attention to the Federal Reserve's minutes from its most recent meeting. That's investors and the delayed U.S. jobs report for clues on future rate moves. Spot gold. We see that was up by 0.5%, $4,088 per ounce. Gold futures for December delivery gained about 0.5% also, $4,087 per ounce. And we see spot silver, that's the one that's shining today, $52.08, 3.10% up, a big jump. Platinum, 1.39% up. Palladium, 1.64%, $1,581. So let's discuss more now, get an outlook for most of the global commodities at this time. So definitely a lot is happening in the global energy market, and with what's playing out so far with supply and demand dynamics there, I'll be discussing what OPEC Plus and U.S. shale, how all of that is being tested at this point. Join us for the conversation. We have Daniela Corsini. She's a senior economist, research department in Tessa, Sao Paulo. Great to have you on the show.
Thank you very much for inviting me.
So, are we still on track for an oil surplus, in your opinion, for 2025 and 2026? And I guess this is a case of, who blinks first, at this time. Is it going to be OPEC Plus or U.S. shale?
Well, we had this week a lot of important reports. We had the International Energy Agency pointing for a surplus of as much as 4 million barrels per day next year. We have the US Energy Information Administration pointing to a 2.2 million barrel per day surplus, but we expect the surplus will be lower. We forecast a 1.5 million barrel per day surplus, which is much lower than envisaged by the other agencies because we are more bullish on demand. We think refinery margin are very strong, especially for middle distillates, and we think refinery runs will remain very, very strong, pushing demand above the current forecast. But you are right, both OPEC Plus and the US will need to contain their supply. I think OPEC Plus will maintain a stable output next quarter, as they announced, while probably the peak in US output is probably in the fourth quarter this year. So I expect flatter output from both big producer next year. And in addition, I think Russian output will decrease significantly because of US sanction, European ban on Russian fuel, and also because of Ukrainian attack to Russian energy infrastructure.
All right, so how much downside is left for crude, if demand keeps overshooting expectations?
Well, if the International Energy Agency is right and we have a surplus of 4 million barrels per day, then oil could drop to $58 first, which is an important support. But then, if broken, it could drop up to 45 or 50 US dollar. But it's not our baseline scenario. We think 50, $70 is a very sweet spot for the US administration. I think the US and Saudi Arabia will do the most to keep oil in the current range.
And which producers would you say are most exposed to a prolonged, sub $80 Brent environment?
I think Russia is the most vulnerable, not only because of low benchmark prices, but also because of a record discount of their crude on the benchmark price. And then in second place, the Gulf monarchies and Saudi Arabia. I think they have higher fiscal break-even oil prices, so they really would need to keep prices higher than the current 60, $65. They would rather point to 80 US dollar, which is not feasible in the current market. On the contrary, oil major and the US shale producer are much more resilient. Usually, European companies could keep the current payment to shareholder and the capital expenditure plan as long as crude oil remain above 50 US dollar. So I think they will be much more resilient.
All right, so definitely we know how geopolitics tends to drive sentiment with the commodities markets. Do you still see a geopolitical risk premium? Has that structurally changed so far?
Yes, the geopolitical risk premium is very important now, but it's true, it's structurally changed compared to the past. Thanks to information, we have much more real-time information. We know exactly where are cargo going, how much fuel they transport. We know how full are deposits. We know which are the damages to infrastructure from attacks both in the Middle East and in Russia. So we have much more data to work on. So the market is less reactive to geopolitical tension, but it is able to react much more quickly and sharply when a supply disruption really occur. So this is the big difference with the past. We have more news, so more volatility where when an event occur, otherwise more stable markets.
All right, and definitely I know some of the traders want to know what to expect for prices, especially with Brent. What type of event would truly move oil above $100 again?
I see geopolitical risk as the main driver, and I'm especially concerned with the Middle East, especially a blockade of the Hormuz Strait would push prices above 100, but it's quite unlikely at the moment. Hopefully, if the tension around Israel and Hamas ease. And then the second point is Russia. If we have escalation in the conflict between Russia and Ukraine, we can have supply disruption from Russia, and this is a severe risk for the global economy.
All right, definitely. We'll keep track of that market. Thank you so much. It was great having you join us. Daniela Cosini, she's a senior economist, research department in Tessa, Sao Paulo. Thank you for coming on today.
Thank you very much.
All right, let's get a check on other stories now. See, Kenya's telecom regulator, they're pushing back hard on online fears. The Communications Authority says new SIM card registration rules do not require telcos to collect DNA, fingerprints, or blood typing. The agency insists those biometric definitions are simply legal language, not a directive. It's all about strengthening security, fighting fraud, and building trust in the country's digital infrastructure. Then on the inflation front, we see South Africa. They're feeling the pinch as headline inflation rises to 3.6% in October, driven by higher food and energy costs, while core inflation, which strips out volatile items, shows signs of easing. Economists say the mixed signals leave the central bank with a tricky balancing act. The South African Reserve Bank faces pressure to support growth without stoking further inflation, making its next policy decision one to watch closely for businesses and consumers alike. All right, now to our next conversation. As Africa accelerates its digital transformation, the way data is managed and protected is becoming central to business, innovation, and trade. Countries like Ghana and Nigeria are strengthening their data protection laws, raising important questions about African businesses, navigating these frameworks and what it means for cross-border digital trade. Today we speak with Teki Akwete, a leading expert in data protection and privacy in Africa, to explore how robust data governance can drive both compliance and investor confidence. Great to have you in the show. So you might have to unmute. I see your mouth moving, but I can't hear you. Well, let's get into it now. With countries, like Ghana and Nigeria, we're seeing them strengthening their data protection laws. How do you see this impacting, cross-border digital trade in Africa?
I believe you can you hear me now?
Fantastic, I can hear you.
Great, great, great. Thank you once again for having me. Definitely with the AFCFTA at the helm and being very much aware that trade as we see it today is heavily driven by digital tools. And that trade goes along with information as well. Strengthening your data protection ecosystem essentially means that you are strengthening the aids that would actually facilitate digital trade across Africa. So it's not even a choice for our countries anymore, especially when we see that digital transformation will be the driver to digital trade in our economies. It means that the right framework, such as the laws around cybersecurity, electronic transactions, data protection, and so forth, must be strengthened in order to ensure there is seamless flow of information, but also that it is done in a way that is secure and brings confidence and trust to the ecosystem.
All right. So, in your opinion, do you think African businesses are adequately prepared to comply, with these data protection requirements? I've heard some say they're quite cumbersome at this point, especially for startups and SMEs.
I think the biggest challenge we have seen in our work is especially for the MSMEs, I'll call them small micro um, enterprises, as well as the startups, have a bit of a challenge in terms of understanding these new issues and then applying them. But having said that, with initiatives that is going on in countries such as Ghana, Nigeria, and also the rest of Africa, some efforts are being put in place. We could do a lot more to actually enhance it, but we have a long way to go. And it's important for policymakers to actually put in place frameworks that are also enable the innovators and the small businesses that form majority when it comes to the digital trade that we are hoping to roll out, to be able to adapt these systems effectively.
Right. And with the when it comes to technology in Africa, Africa imports a lot of technology. Do you think Africa can really secure its own data, truly?
I think that the question is a bit tricky to answer. There are a number of modalities in place to secure data. Currently, some countries are doing it through a number of frameworks, but you're very right in identifying that a lot of the infrastructure is not necessarily emanating from our countries or built by us. And so, in order to ensure that we have better control around it, beyond the developing the right legal frameworks, governments and policymakers have to be more deliberate in terms of what policies are being in place, in terms of the bilateral arrangements that are also taking place internationally to ensure that we have better control of our information.
All right, definitely a lot to look out for there. And I'm sure you see, data protection regulations there. How crucial is this for investor confidence in Africa's digital economy?
Unfortunately for us, globally, data protection has been adopted almost worldwide. And every organization or entity that you're engaging with from any part of the world would probably have one or two obligations that require them to comply with data protection laws, even as they trade outside of their economies or engage with other partners. And so, having the right data protection framework that can actually encourage not just investment, but also bilateral trade and other engagements is going to be key to those that are going to be very successful in benefiting from international investments, as well as other trade that is coming in from our own communities into the rest of the world. To give you an example, if you're a company that is, let's say, building another social media network or a platform, and you want to engage with Africans, you want to engage with other citizens in other parts of the world, US, Europe, Asia, in order to enable you perform effectively there, you definitely have to meet their requirements. Likewise, when they are coming into our countries, we also require them to meet that. And so having frameworks that puts you at par with what is happening in the other economies is actually a great benefit.
Right.
So that our businesses that are interacting don't face much difficulties in terms of having the right ecosystems to meet the legal requirements and
So much to unpack there, but definitely it's a new oil data at this point. Thank you for helping us unpack this. Teki Akwete, senior partner at Insia Akwete and Co., and to the founder and executive director at the Africa Digital Rights Hub. Thank you for coming on the show today.
thank you for having me.
All right, let's get a check on what's playing out with other markets that we track now. We see on the African continent there, we still see negative sentiment right there with the NGX not recovering yet at this point. It's down 0.19% the start of this intraday. Johannesburg Stock Exchange, that's better there, 0.97%. Let's flip over to other markets that we track quickly now. EGX 30, 0.16% down. Nairobi Stock Exchange closing the previous trade down. Let's get a check now on the Middle Eastern region. We see it's also red there. We're still seeing pressure with global indexes at this point. 0.54% down for the UAE, 0.40% for the Abu Dhabi index. That's the picture there. Tadawul, just the Qatari index, the lone gainer there, 0.64%, 10,751 points. Now we see for US stock index futures, they were slightly higher today, looking much better, but we'll see if those tech sell-offs continue today. But this is giving direction for what to expect at the close of trade. You see the tech-heavy Nasdaq, 0.39% up. S&P futures, 0.31%. Let's flip over to Asia now. Let's see what's playing out in Asia. And investors are looking out for NVIDIA's earnings there. That's going to drive sentiment really there. It's a red close for Asian markets that we track. Hang Seng 0.38%, but we'll flip over, we'll see for the Nifty 50, that's much better, 0.55% up to close, breaching that 25,000 level for the index at 26,052 points. Now the Shanghai Composite, that's closed in the green, 0.18%. So that's the picture there for most of the markets that we track. But let's take it on to Europe now. Let's see what's playing out right there in Europe. We have Lars Holter there. Great to have you, Lars. So what's it looking like in Europe? Are the markets looking any better?
Yes, they are. We had actually red across the board on all the European boards of trade, but right now we're actually seeing them in green. Not much, however, and it wasn't a good couple of days to begin with. So what we're seeing is a little bit of a break from these losses. If you're just looking particularly at the DAX, it was like 5 days ago we were over 24,000. Now we're hovering just around 23,000, and that has been now over the last, let's say, 5 days, the steepest drop we've seen in more than a year. and in a market largely defined by sideways trading for months and months. This seems to be like a game changer. Investors moving out of the market, Ladi. There's anxiety, investors worrying about markets having reached a peak, and we're also obviously seeing crypto down. We're seeing all these other markets down. So it looks a little bit like rats fleeing the sinking ship. Then again, tonight, and you just said it yourself, we'll be getting those NVIDIA numbers, and then we'll see about how AI is doing, whether or not we're heading here in a bubble or so. Definitely, that was the main driver of the rally we've seen, and it's going to be really interesting to see over the next couple of days, I would say by the end of the week, how this is progressing.
Right. Let's see if NVIDIA will be that catalyst today. But we're also seeing Germany's mid-sized companies, traditionally known for manufacturing, they're pivoting now to defense. With the economy there in Germany kind of, stagnating and many companies losing market share to China, many companies across the country are trying to, reinvent themselves over there. What can these companies do to stay in business, in your opinion?
Well, yeah, Eladi, that's an interesting story. They're trying to adapt, and sometimes you can change what you're selling, and sometimes you can change who you're selling to, and especially that's what we're seeing right now with lots of mostly mid-sized German companies moving into the defense sector. The German Association for Security and Defense Companies has seen its corporate membership nearly double over the past year, with more than 200 companies joining the group. That's companies from all sorts of industries that all have one thing in common. They never worked in defense before, but they're trying to get into that sector. There's a very simple reason, of course. Our orders are down in many of the other sectors. Business is slow. Many companies working way below capacity. And meanwhile, the German government is also almost doubling its defense budget. Now, Berlin, is likely to spend 170 billion euros annually on defense over the next couple of years. And while 80% of that is going to the big companies like Rheinmetall or Airbus Defense, those companies are working with literally tens of thousands of smaller suppliers, and that is now an interesting field for many companies.
But do these companies, do they have what it takes to, supply the military?
Oh, yeah, Ladi, they certainly do. These are not random picks. Think of a supplier for the auto industry. If they're building parts for an engine, they can adapt their product to fit other engines too. Some of these companies we're seeing switching into defense are in making parts, or they are in coating technologies, or even in tech. There's a company in southern Germany that specializes in 3D printing circuit boards. So far, these circuit boards went into cars, and now they're also going into tanks and military trucks. Of course, in order to supply the military, these newcomers will have to get certified, and there's rigorous testing. But of course, that shouldn't stop any of them. Most of these companies we're talking about are family run. They've been in existence for decades, and they've prospered due to their ingenuity and their innovation and also their quality of work.
All right. Definitely so much to unpack that. We'll keep tracking to see how these manufacturers, end up pivoting into defense. Thank you so much, Lars Holter, for the details there.
Thank you, Ladi.
All right, let's circle back now to the U.S. Let's get the closing numbers from our correspondent, Maria Bird, for yesterday.
The U.S. stock market had a challenging day on Tuesday as the Dow Jones was down at 1.1%. The S&P 500 also down at 0.8%, having its fourth consecutive day in a row of a losing streak. As the Nasdaq had the toughest day of them all at 1.2% down. As many investors are wondering if the AI bubble could be bursting, as companies like NVIDIA had a rough day. As many investors are also watching to see what this will mean for the closing of the fourth quarter. As typically this time of year is an upward swing for the U.S. economy, as much of the retail markets typically are in the height of the season. But only time will tell as to how the U.S. will close out 2025.
All right, thanks so much, Maria, there for giving us the details. But let's flip over to the crypto market now, and it's still extreme fear in the market. Looking at the fear greed index, 16 points over 100. Definitely, investors use this fear greed index in different ways, trying to find entry and exits into the market. Now we see the headlines there. MT Gox, they moved 950. That's a defunct Japanese cryptocurrency exchange. They've transferred $953 million worth of Bitcoin, selling $16 million of it on the Kraken trading platform. The move comes as the exchange continues the process of reimbursing creditors. Now we see MasterCard, they're tapping the Polygon blockchain for verified crypto usernames. Definitely, the market watch say that this is a way for the Polygon network there to get more visibility with MasterCard using that. Then we see the Senate, they're planning a December markup for the crypto market bill. Definitely the U.S. Leading there when it comes to what to expect. It's a landmark bill aimed at overhauling the cryptocurrency market structure. Legislators are moving to align there to find out ways to keep this sector regulated in the U.S. But let's get a check on crypto-related stocks there. We see they've recovered from the drops we saw yesterday. The likes of MicroStrategy back up about 5.82%. Marathon Digital 3.21% to close yesterday. So it was all red yesterday, but we see a recovery for the trade yesterday. So basically, that's how most of the markets we track are looking for this trade today. We'll give you more updates tomorrow. We'll see if it gets better. Maybe some cherry picking. That's for the local boss right here in Nigeria. That's the show today. Thanks for watching. I'm Ladi Williams. Bye for now.